Oluyomi, what do you make of what's taking place on the Nigerian stock market? As I said, most of the activity centered around banking stocks and Dangote Cement's falling to a new all-time low yesterday.
Well, in our view, we think it's as a result of a combination of factors, both domestically as well as from the global scene. Constantly, it's been said that the Nigerian market is mostly traded by foreign investors, and we are not isolated from what's happening globally. What we see from where we sit is basically global portfolio managers having to rebalance their portfolio even as global equities continue to trend lower. That's from the foreign scene. And domestically, the macro is not too impressive. We are being plagued by a couple of concerns ranging from security issues and down to economic issues. So all of these put together has been taking a toll on the market in general.
Let's look at some positive developments when it comes to the macro economy. Things have been really tackled head on there since the appointment of the new finance ministry and the establishment of the economic management team. Now that's to obviously coordinate a growth of the Nigerian economy and encourage investment in the economy from foreigners. Many investors are saying that a new import policy is key to this. They have cited some changes that they're likely to make to import policies. Can you give us some detail on what is being put forward on that front?
Yeah, what we see basically with what the EMT, that's the Economic Management Team, has announced is basically an extension in policy from what currently is obtainable in the cement industry. So what they have said basically is to encourage large-scale investments in local production. And of course, in doing so, they are saying basically only those who put in huge sums of money would be allowed to import the shortfall necessary to meet national demand. This is supposed to last over the next 5 years. In all, basically, it's just to encourage more domestic investment as well as foreign investment in the Nigerian economy. And I think the special focus is on the agricultural sector. One of the key things the Minister of Finance has said is she's looking at basically securing the Nigerian economy in terms providing food security for the Nigerian populace, and this is quite important, and this is a step in that direction. And also, it's in pursuance of the federal government import substitution policy in the medium term. Now,
the Ministry of Trade and Investment also pledging 1.5 trillion naira investment into the non-oil economy. This is of key importance to diversify Nigeria's economy away from its reliance on oil and natural gas. Where will this capital be directed?
Well, a huge chunk of the 1.5 trillion naira, approximately about 66% of this sum, is targeted at the manufacturing sector. It's expected to be the main beneficiary of these pledges. Aside the manufacturing sector, we are looking at significant sums also going to the real estate sector. Like I mentioned, the agricultural sector, the tourism sector, as well as the automobile sector in the economy.
Nigeria is also looking to rationalize the 400 parastatals and agencies in order to cut recurrent expenditure, a target of the finance minister herself. But this is often a euphemism, rationalization for a job cut. Is this going to be the case?
Sorry, I didn't get the question.
Rationalization of parastatals is also key to the new finance minister's plans going forward. Does this mean that jobs will be cut in the public sector?
Well, inevitably, that appears to be the case. What we have seen is a lot of duplication, a lot of redundancy and overlaps among these over 400 ministries. In a bid to promote efficiency within government and to cut cost of running the government, it's almost inevitable that some of these excesses would have to be cut off, and in the process, well, jobs would probably be lost within the ranks and file of the government, especially at the central level.
But of course, if there are overlapping functions, I suppose that will have to be a necessary evil, some might say, in order to increase efficiency of the public sector.